Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Friday live session. Just about 2 minutes left in today's trade. Almost the complete zigzag movement has happened today in the markets. You can see here, this is the chart of Nifty, opens at around 18,656. From there on goes all the way up to 18,556. If you see, yesterday's low was 18,550, so it survives by about 5 points. It doesn't break yesterday's low, and after that it makes a pullback attempt, goes up to yesterday's high of 18,659. Again it fails to cross that, and from there on it comes down and currently trading at 18,620 levels. So what does this chart indicate for the day? On the intraday time frame, if you see, we are in a downtrend, and the Monday and Tuesday's gap up and staying there has not resulted much of up move by the bulls. And Wednesday and Thursday we saw some kind of muted movement on both the sides, but slightly on the downward bias. So yesterday we saw the lows of 18,550. Today it opens within the range and comes down but doesn't cut yesterday's level. After that it tries to bounce back and goes up to yesterday's high. Again it faces the resistance there and it comes back, again closes within the range of 18,650 to 18,550. So this is the range it has been playing today, Nifty. The inference is, though it took the support at yesterday's low, it was not able to convincingly cross any of the highs. Because it is not able to cross any of the highs, we would still say this thing is going to be little on the downside bias only. So even in the coming week there will be more of downward bias than upward bias. So my inference on these kind of charts would be, yes, in a downtrend it has today taken a support, it has not cut the downtrend once again today. After that it tries to go up, but it faces resistance at the recent highs and comes back and closes within the range, which means even though it has taken the support, so somewhat on the same lines, it opens at around 44,100 levels. From there on it comes down to 43,950. Yesterday's low was 43,886, 861, sorry. Yeah, yesterday's low was 43,861. It does not take out yesterday's low, which means it is taking support at yesterday's low, but it is not coming to yesterday's high. So it tries to do a pullback, fizzles out at 44,271. Yesterday's high was 44,290. It fizzles out even before yesterday's high itself and closes within a range and at around 44,075. So small difference between Nifty and Bank Nifty today. The patterns are more or less same, except that in the Nifty chart, if you see, it takes the support or it does not cut yesterday's low, does a pullback from there, tries to go over yesterday's high, but it fails and comes down. And in this case, Bank Nifty, it takes the support or does not cross yesterday's low. From there on tries to do a pullback but doesn't even cross yesterday's high. It fizzles out even before that and closes around 44,074. So this is with respect to the two charts of today. Markets have closed at Nifty has closed at 18,633. Bank Nifty has closed at 44,074. On the spot, Nifty is showing the values 18,534. Almost 100 points difference is there between futures price and the spot. Nifty Bank 43,937 on the spot. This is 44,074 on futures, which means almost about 140 points difference on the Bank Nifty futures price. So both the indexes are trading somewhat with a higher premium. For whatever reason, it is trading with a higher premium. In fact, today there was some discussion on Twitter what would be the best price to analyze, whether we have to trade based on spot or on futures. This point we have discussed many a times before also on my live videos. We have to just follow the futures price action, for the simple reason being futures price is a traded price. There are buyers and sellers at those ticks, so those highs or lows or those values are traded values for a position. But when it comes to the spot price, it is not traded value, it is a determined value based on the traded price of other stocks in that index. There is a difference. People might think spot is more authentic and futures is more erratic, but it is not so. Ultimately positions are taken based on the futures price only. So when it comes to the stocks, when it comes to index, it is very clear, it is easy for us to follow the futures and not the spot. But when it comes to the stocks, both are traded. Stock spot price is also traded, futures price is also traded. So in that case, what is the mechanism that we need to adopt? In my view, if you are playing the cash, then you have to go by the cash price. If you are playing the futures, you have to go by the futures price. And if you are playing the options in those stocks, then again you have to go by the futures price and not spot price. In spite of ultimately the expiry will happen on the spot. Until the expiry happens on the spot, futures also has some kind of a premium or a discount running on the spot price, and options also has some of the volatility or theta or gamma embedded into the price. So that being the case, futures will show little bit more better picture for us to analyze. Many a times if you are playing the stock options, many options players, they just play the price of the options itself. But in my case, when I trade options, whether it is index or on stocks, I always look into the futures price and then take a corresponding trade in options. So that is always better, because options price by itself has too much of volatility or movement of more than 25 to 50% in a single day. So difficult to decipher a trend in such kind of price action, when on any given day if a price fluctuates anywhere between 25 to 50%, then it is difficult to determine the trends. At least I have not been able to figure out any workable mechanism to trade options directly based on options price. But I always find it comfortable, look into index futures. If it is Nifty, then look into the Nifty futures and accordingly take a position in options. If there is a breakout at say some level 18,600, then I would go for 18,600 or at the money strike in options on the call side or on the put side, depending on the trade. When it comes to intraday, I generally trade only the naked directional calls or puts without any hedge. That is not required, because the stop loss is our time is the stop loss 330, whatever is the case, whether profit or loss, we exit or there is a hard stop. We play with the hard stop on the options price and also on the futures. So that being the case, in intraday we don't have to do too much of hedging activities on our positions. Many a times many of the players, especially the option sellers, they do far out of the money calls and puts just for the margin benefits. Instead, I would say for them it would be better if they just do the buying of options on intraday basis, looking into the trend and doing a more of a directional trade, and have a time based stop loss of 330 for that particular day or some hard stop based on their entry price. That would be a better approach for intraday option players. Better to trade on the direction directly with small quantities in option buying strategy, instead of selling and waiting for the time decay or the volatility decay, and also taking far out of the money options just for the margin purposes. Instead of doing all of these things, just determine the direction, look into the momentum and just play on that direction on the intraday basis as option buyer. But when it comes to positional, options gives lot of in fact possibilities. So you can construct your portfolios in n number of ways. You can play only option buying, or you can club option buying as well as option selling. You can do so many things. You can play at different strike levels at different quantities on the upside or on the downside. You can hedge it in various ways. You can create debit spreads, you can create credit spreads. You can do 1000 variations when it comes to options positional play, especially when you are doing for a weekly options. We can do wonders depending on our capital, depending on our direction. We can construct option portfolios in multiple ways. There is no one single way when there is a direction or when there is no direction. So but when it comes to intraday, which most of the players are anyway intraday players, in fact with limited capital, small capital, retail traders, I would say just try your hand in option buying, and just ensure don't on any given day do not pledge more than 10% into the trade. In the sense, if you are sitting with say 1 lakh rupees of capital, on any given day your option buying quantity should not exceed more than 10,000 rupees. So even if you cut your options at 50% of your option entry price, still you would lose 5,000, and 5,000 will still be remaining, which will be for the next day you have 95,000 rupees as capital to trade. Again, do not trade entire 95,000 in option buying. Instead, trade only 9,500 and take the positions whatever is possible. Always take the positions at the money, not intraday. The main thing is we are not playing on the DK part, we are playing the momentum. So momentum is always there maximum at the money strikes, not deep in the money. Also there is not much momentum, and there is not momentum anyway in far out of the money or far out of the money options. So for an intraday options player, better would be to just stick to option buying game and trade at the money, and do not risk at any given point of time on any given intraday more than 10% of your total capital. So that way what happens is you will remain in the game for long. Even if you do 10 days of losing streak, you will not lose out on entire capital, because the first day you would have bet 10,000, next day you would have bet 9,500, the third day you would have bet maybe around 9,000, and then fourth day you might bet only 8,000. So it will, your capital will never go to zero. That is what you have to keep in mind. Never blow away your capital. And once you start making money, once your profits are more than the capital, initial capital that is invested, then you can add on to the trades. So keep these things in mind. Your risk management, how you manage the profits, how you manage the losses, and also how much of the profits that you will deploy back into the business is what matters for you to stay in the game for long term. So these are the things that we give certain hints on how to do trade on a regular basis, how to become a trader, how to think like a trader, so that if you are interested to know more, you can always call us on the number that is being displayed. We do the boot camps as well as coaching programs, one-on-one hand-holding programs in our Trading for Living program. Apart from that, we are doing daily live sessions. In case you are interested to just watch the live session, come during the market hours, hit the notification button on this channel, subscribe to this channel, so that you will be updated with all the informations. Have a good weekend. Enjoy your weekend, or do some homework on the markets. Come back on a Monday morning with a fresh perspective on the market. Until then, Om Swasti.